That's the second time now that Zoom has just lost my meeting. That's getting frustrating. Good morning, everybody. Hope you all had a good weekend. It is another full week. And looking at the missing numbers that Tesla gave and Apple's news last week, that little 1-2 punch combined, we may finally start to see the capitulation that we've been looking for. We need this market to really just fall out of bed. I was looking at a lot of the flows over the weekend, and as much as everybody says they're bearish, that's how they're answering surveys. That's what they talk about when they're on the news. Everybody's so bearish, and yet if you look at the flows, they're not putting their money where their mouth is. A lot of them are still long or still holding. So we need that to break. And with Tesla missing its numbers this morning and being down, Apple and Tesla were the last two, like a three-legged stool. They were the last two pieces holding this market up. So we could finally start to get that capitulation that we've been looking for. Morning briefing, like we normally do, we want to take a look around the world, see what was happening in the overnight hours, and if there is anything going on that could reverberate through our trading day today. Most of the time, you're not going to find something that big, right? Like a ship stuck in a canal that disrupts global shipping for over a week. Normally, it won't be that bad, but you want to be looking for something like that. The day-to-day stuff, whatever happened in Asia, the best sector or the worst sector, it's always a good thing to kind of pick up on that, see if it bled over into Europe, and then from the European session, what's doing good right now, and is it likely to bleed over into our session, including who's talking over there. So we got European Central Bank speakers this morning, and any econ that they may have. There is a market wrap for Europe, even though Europe's not closed yet. It's basically lunchtime over there. It's noon. Between this and Bloomberg's free email, that 5 things you need to know, you've got a pretty good idea of what's coming in on the day, right? And then there is there's a Seeking Alpha podcast, and it comes out on like Saturday or Sunday. It's a really good heads up for the week ahead. Investor conferences, news events, product releases. So that's a really good way to start your week. It's not a very long podcast, you're like 20 minutes. Credit Suisse is in the news this morning. They are swearing up and down, no, everything is fine. Everything is just fine. And they said the same thing in 2008, right before everything crashed and burned. So nobody believes them, but we'll see how that kind of plays out this morning. Looking at the volume, well, let's go to Market Watch first. Get that out of the way. PMI, construction spending, ISM, and then auctions on the front end. These are likely to be pretty impactful. If you take a look at the Fed Watch, in the last month, we went from no chance of a 75 basis point rate hike to a 54% chance. And pricing in that move and then the changes off of that, because they've been backing it down, right? They went from a 0% chance to a 75% chance. Basically, I'm rounding up a little bit. And then they started to unwind that a little bit down to 54. A lot of what you're seeing in the market right now is pricing in and then unwinding these anticipated predictions. And there's been this over the weekend, there's been the slightest little tell where the market yet again seems to think that this Fed is going to blink and that they're going to pause or pivot on these hikes. I don't know how many times the Fed needs to say it. They're not going to pivot. They're not going to pause. They're not going to blink. They're not going to stop. They do not want this inflation to come back, right? And it's just like those horror movies where the bad guy gets beat down and everybody thinks he's dead, and then they sit around drinking a beer and kumbaya, and the bad guy gets back up and murders everybody. They don't want this inflation to come back after them again. They want to make absolutely sure that it's totally and completely dead, like dead, right? Like break its plate, it's not coming home for dinner, it's dead. They've made that clear. So if the market starts to buoy to the upside on any kind of hint of a pivot or a pause or any kind of language or discussion like that, that would be a great thing to short the rip, right? Sell into that sucker, because when we come into November 1 and the Fed says, we're not pivoting, what are you talking about? Well, the market's going to roll right back over again. And that's if we even actually get a buoy to the upside, because with Tesla and Apple having the news that they've been having, we could finally break down and get below 34. So we'll see. The volume is within range. It's not overly heavy, and it's not overly light, so we turn that off. And before we dig down into the day-to-day, come out to the weekly for a moment. Last time we were out here was on Friday. It had not yet been locked into place because on Friday this thing is moving around, right? It gets locked Friday night. So we still want to be able to answer that question. What did they do with the volatility this week? Did they increase it or did they decrease it? And you don't have to get this spot on perfect. Just kind of draw a box around last week's expected move and then just move that box over. If the box has a gap like this, then it shows that they increased the volatility for the next week, right? Simple as that. If it was sticking out through the top or the bottom, then it would show that they decreased volatility. Simple, right? Down at the bottom here, we've got distance away from the 10-period daily moving average, and we're sitting at about 2.5% away from the 10. We are moving closer towards the 10, so even though we're underneath it, we are moving back up at the 10. We've kind of got into year-to-date average distance. So we would have anticipated a pause or a reversal here and a move back towards the 10 at that point. Put a little bit more time on this. Yeah, it shouldn't have been set to 60 anyways. Give it a little bit more room. So it's a year-to-date, or a 1 year instead of such a short time frame. So we got a little bit of perspective on how far away from the 10 we are. We have the expectation that we're going to go back up and make contact with it, at least get really close to it. It's what we've been doing. It's what price does, right? Treats that 10 like, say, the center of a basketball court. So while we're here, swap that over to a week. Kind of ask the same question. How far away from the 10-week moving average are we? We're about 6%, but we were, 7 3/4. So we're moving back towards that 10. And moving towards the 10 doesn't necessarily mean that we need price to move. All we need to do is hold still and let the 10 catch up to us. Either way, right? One side or the other doesn't really matter. Now we talked about double bottoms enough that this should not be a surprise about, what we're about to say here. When you get a double bottom, you want price to go lower than the previous bottom. So this was the first bottom. We came back down and tagged it. We went through it. It's supposed to go through it, right? A really good double bottom is supposed to go through, so that once it begins to rally back up, everybody who went short has to cover, and they cover by buying, and it adds to the buying, and then you get this big, massive, monster ripping candle to the upside, right? And we've seen that, say, back here when we had a double bottom and we went through the previous low, dipped down to trap them shorts, and it's just a part of that rip, right, to the upside. Now, the shorts didn't cause the whole run, but they certainly added fuel to the fire on that first big green candle, right, that one right there. So don't automatically believe that just because we broke this previous low that we're going down. We still need to see a signal of continuation lower, and not just, well, we went a little bit lower. All right, we got an MDP. We are underneath the daily pivot. We haven't touched it yet. MDP is a missed daily pivot. It's an actual trade strategy. It's not mine. I didn't develop it, but it's a pretty popular one. If you were to go search on YouTube, you would probably find somebody teaching it. So for a move to the upside today, we would need to get through the daily pivot point, ADR half, cash open of yesterday, Globex low of yesterday, the weekly pivot point, RTH high, yesterday's high, and the ADR full. So a lot of pivot points overhead. I was looking at the close on Friday, the 4 o'clock close, right? Not the 5 o'clock close. And the 4 o'clock close was at 36.12, and yet the 5 o'clock close was a lot lower, right? So looking at it like this, we just got back to the close, the Friday close, and we're now challenging this little pivot point here. Sunday very often has that issue. Just a second, guys. All right. It's where you often find a gap like this. That's all right? We make it work. Just keep your eye on that pivot point, 36.12, since it is the 4 o'clock close. Could have some validity to it. On the NASDAQ, for an example, last night when I was looking at it, we still hadn't yet closed that gap. So that box right there is our own Globex. If we happen to break through that, then we'll work on those pivot points that I was just talking about. 36.31, 36.40, 36.50, and the 36.40, which is the ADR half, it is also the Globex low from Friday, and it is a retrace level, 23.6. Nope, this one up here, 38.2. So it's kind of nice how everything just kind of lines up, right? When you're laying out your pivot points and you're performing technical analysis and nothing lines up, it's usually a hint that there's something going on. Either you missed something, you're doing it wrong, or you're trying to perform analysis on something that has gone parabolic, right? Because performing analysis on a market that is acting and behaving in rational, normal form, that's when technical analysis works the best. Because all we're really trying to do is look at the past and try to figure out what's going to happen in the future. But if you're dealing with some crazy, stupid market that has big, massive gaps and parabolic moves and monster candles, kind of like a daily chart of GameStop, technical analysis doesn't work very well on that stuff. So if none of your analysis is lining up with anything else, could be a hint, right? So we talked about an upside move. Now we need to talk about the other side. So if Apple and Tesla start to roll this market over, we can re-challenge the Globex Open 35.95, test our own Globex low 35.70, ADR half 35.46, and a full ADR at 35 flat. There was a JP Morgan caller that was rolled right near the end of the day on Friday. And it wasn't the only caller that was rolled, but it was the one that most people were talking about. And it was 35.80. I mean, we got really close to that as a magnet on the SPX. We could have actually maybe hit it on the SPX. $35.86, if I remember right, is the precise spot of where that thing was. And man, did we not get to it. And overshot it by like a few pennies. Gotta love it, right? You got a little bit of an ugly kind of squished head and shoulders down there. Just remember, the uglier the pattern, the less conviction we have in that pattern, right? So to answer your question, yeah, I mean, there is some kind of squished bubblegum looking head and shoulders inverted. I wouldn't play it that way. Also kind of lines up a bit like a Busby, right? If this gray box was our range and we finally broke that range and we're coming back up to test the bottom of it. %200 of that range would be a full ADR to the downside to 3,500. All right, 10-day, 30-minute volume profile. We're sitting right on the lower edge of this thing. The point of control, as I was talking about last week, how it was sitting up near the highs, was going to drop off of that highs and come down to us really quick. Well, it's down to us Now it's also a part of the significant overhead resistance that we have. And that resistance lasts all the way up to 37.20. Once we get above, say, 37.40, we start to get into this shallow area, and we can move up to 37.80. But we're going to have to get through that point of control first. Now, it can do that, but it would take, to do it in like a single shot, it would take a significant amount of economic angst out there. You do have Fed speakers today. If they continue to give any hint that they're going to pause, this market is very likely going to make that move to the upside. We were down quite a bit last week. Everybody's looking for an excuse to buy. If they give any kind of subtle hint that they're looking to slow down the pace or pause, then we most definitely are going to challenge that 37. Otherwise, the point of control is at 36.50. All right, we got an Virgin point of control from the 5-day at 36.50. Wow, confluence, right? That's where the other pivot is at. So if we do start to break to the upside, that's my target today. At the very least, 36.50. That's an untouched point of control, so if we get anywhere near it, we should gravitate to it. First, want to focus on breaking out of our own Globex. And the entire move is going to be stuck, like I said, through all this trash, right? So it's not going to be an easy move. But here's an example of that kind of move inside of trash, right? We started out kind of in the lower portion of the Globex, started working our way up, trying to test a breakout in that Globex. Finally made the breakout, and through a long, arduous process, it finally made it up and broke the previous day's range. But it was just a hell of a fight, right? Because it had all this trash from the previous days to deal with. We could see exactly the same thing today. From low to high, that was nearly 3.75%, right? I'm not even at that low yet. There we go. Nearly a 4% move that day. So certainly possible. And that move happened in the later part of the day, right? Remember, half our day is already done at this point. It doesn't feel like it, right? But it's always good to be reminded. The day started yesterday, 6 o'clock last night. So in a 24-hour period, we're more than halfway done. That 4% move that I've got measured there happened from 5 a.m. all the way up to before 4 o'clock in the afternoon, right? So in less than 10 hours. So 36.51, 36.90, and the ADRs. All right, energy and energy and energy this morning. Oil services, oil and gas exploration, just straight up energy. Some biotech, bonds, the 20-year. some real estate. What I'm not seeing is technology, financials, and consumer discretionary, right? Those three risk-on sectors that we have to have if we're going to have a bullish market. And it should be a little bit concerning that we're up this morning, and the things that we would need to have an up market, the sectors that we would need, are not leading us. So here's financials up 0.5%. That's just sloppy. And tech not even up 0.5%. That little Twitter pop-up reminded me. I did rebuild the Twitter Discord, and it's got all these fund managers in it. So if you're not using that Twitter Discord and you don't like Twitter, like me, I hate Twitter, then this might be a good way to go. Right? That way you can see the tweets that you're looking for without having to actually be on Twitter. Oh, last week, after that event with the British pound and what's going on in Europe, the dollar finally broke. So we've been seeing this multi-decade run, right? Getting up into levels we haven't seen since like 2000. And we got this huge trend line that we came into contact with right around that 115 area, started to consolidate, and all of that was normal. It was exactly what we expected, right? We'd had a really strong run. It had every right to pause there and kind of consolidate. But what we had been seeing is every time the dollar was advancing, stocks was going down, right? So the ES, the NASDAQ, heck, even bonds, we've been seeing that beat down, right? Strong dollar, everything else is going down. Every time the dollar rallied, everything else was just getting a gut punch. Until the later part of that last week. Going into Thursday and Friday, you had the dollar down and it had everything else too. So it wasn't responding the way it had been responding. Couple of things to take away from that. One, keep your eye on the VIX. The VIX has been an absolute dog this year. I think that might change. Two, don't expect the dollar to be the other side of that teeter-totter like we've been seeing, right? Because it doesn't always work that way anyways. When the dollar goes up, everything else does not immediately get pushed down in a normal market. Having a why behind the dollar is moving usually is what we have to go and discern before we start to figure out if a rising dollar is actually going to be a good thing or a bad thing. Saying most of this year, a rising dollar has been a bad thing for everybody else. Come on. That's weird. All right, so my mouse is kind of synchronized between all these charts. In the upper left is the ES, and in the upper right is the dollar. The dollar peaked out on 927. The ES was sitting in a doji situation along the lows of a 5-day run on the 27th. So on the 28th, the dollar went down, the ES went up. That was that kind of inverted correlated market state, right? Dollar goes down, S&P goes up, makes perfect sense. The next day, the 29th, dollar goes down, S&P goes down. Wait, what? Right? That's that inversion that I'm talking about. Everything changed last week. So dollar down, stocks down. Next day, we had a very slight bump to the upside in the dollar, and the downward move in the ES and the NASDAQ continued, so we went down even more, even though the dollar went up a little bit. So almost like we were coming back into that normalization. And then, of course, here we are this morning. The dollar still sitting inside of yesterday's candle, challenging the top side of it like we're going to break out. So dollar up, and yet we're seeing the S&P and the NASDAQ with a green candle as well. Sure, not sitting at the highs of the previous day's session, sure. But still, green dollar, green market. We could start to see the dollar not be this heavily weighted, influenced inversion tool. And if that happens, we're going to be losing one of the strongest signals we've had on the year for anticipating what our market's going to do, right? Like, it's been a pretty rough year on a day-to-day basis to try to figure out what's going on. And the dollar has been a leading indicator to kind of give us a heads up. Like, is it going to be a rough day? Yeah, looking at the dollar, yep, it's going to be a rough day, right? And we take it to the downside or we take it to the upside. If that breaks, I don't know, maybe we start looking at the VIX a bit more again. Certainly something to keep your eye on and not to lean so heavily into it, right? The dollar is going through a change event, so keep that in mind. Bond volatility is over 7.5%. This that's a 5-day change, 7.5%. And NASDAQ volatility is up over 7%. Gold, Bitcoin, energy, Russell volatility is up more than 11.25% over the last 5 days. All right, so we're looking at the VIX here. We don't really have a curve at this point, right? Remember, it's supposed to start at the low and run up to the right. And if we're in backwardation, then it would start at the highs and run down to the right. And instead, we've got this kind of roller coaster madness going on. So kind of watch those Decembers this morning, see if they're going to start to pick up and get above January. That would kind of complete the curve a little bit. Or if we're going to see that front end come back down, the November 2s, or 22s. All right, things popping up on the sizzle scan. Airlines, materials, consumer discretionary, which the biggest name in there is Tesla, so that kind of makes sense. Gold miners, oil and gas again. There was some news that came out about the an anticipated supply shock. Over the weekend, I had done the analysis on a XOP, and it's got this beautiful setup for a short. But the danger is when you're playing in that arena is that between OPEC and the White House and any other influence, that a lot of the price action is going to come from outside sources, not from what you see in the candles, right? So even though there's this beautiful short setup, I'm not going to mess with it because it looks like we're about to get one heck of a move in energy to the upside. All right, there's that breakdown in Tesla down to 252. Semiconductors also down, but not, I mean, just barely down. Apple as well, just barely down. So at the moment, Tesla's not taking anything else with it. That's the oddity right now, and I would certainly look for one of these two to change because it's too big to not affect things around it, right? So having moved that far down this morning, it's really a surprise or a wonder that the other monsters of tech have not made any kind of reaction in the same direction. Since energy is doing good this morning, it's worth taking a look at energy. All of these are inside day breakout, every single one of them, which is kind of nice because if we're completely and thoroughly in an inside day breakout and then they start to fade back, they can find support on yesterday's high as a good entry spot for a long, right? And we're already above the worst of the resistance. I think I got a daily on that. Yep, I do. All right, so looking at those same names on a daily kind of helps make this a little easier. So we got this unfilled gap here on the ES, or on the XLE. And we are sitting at around 74 and a quarter, so we're already above this line right there. We're halfway to filling that gap. Now we could just hit that gap and reject, but until we reject, I'd be looking for energy to continue to make that move to the upside. XOM is already working on getting that gap filled over the last few days. It's been doing that, but it's still an unfilled gap. Chevron hasn't even made it up to get into the channel of the gap. Same thing with ConocoPhillips. It's been in that resistance, kind of forming that little bit of a cup. Has not yet managed to even get into the channel. And Schlumberger, same thing. Like you would expect, most of these have similar charts, right? So EOG is up this morning at 116. It's sitting way up here. It's definitely in the channel, really close to getting that gap filled this morning. What I would be watching for is seeing all of these come into that topside gap fill right around the same time, right? As we start getting that kind of rejection across the board in all of these names, even the ones that don't quite get up to get the gap filled, they're going to take the beat down that comes if, say, the ES hits that gap fill first. Now, Phillips 66 has come really close to getting that gap filled last week, and this morning it is filled. They're at 80, 83 and above. So they are, this one is filled. And it looks like we got a really nice TRB there. All right, so I'm going to just stay here for a second, take a screenshot so you have these names, because me reading them to you, depending on how fast you're typing, you might not get it. A screenshot gets you though, right? It takes a second. You can go back and catch the names later. I've shared these chart setups, so you should just be able to go to your XLE chart and bring up all these names. All right, another energy one is XOP. Some of the names are on both, but then again, some names are different. Every one of these is an inside day breakout this morning too. Marathon Oil is sitting at around 23.5, so it's above, it's in the channel right now. We're going to be looking for that to kind of pull back, find support on the channel bottom, and then make that run to close the gap. Same thing with Fang. It's just sitting at 120, 125.5 ish, maybe a little bit more. So it's really close to getting that gap filled this morning already. Like it's been through most of the year, energy and finance, right? Those have been the two plays more than anything else, energy and finance. ExxonMobil's another one really close to 90. So again, I'll just pause here for a second and let you guys take screenshots. Those two energy sectors have a really nice chart setup this morning. XLE and XOP. Now, generally, if you got those two doing good, you want to go over and look at, say, minerals and mining. Right? So XME. Yeah, I mean, a little bit, not as much. Definitely not even half as much. And the flows, the activity isn't as strong over here either. So not an inside day breakout yet. in most of these names, and not any real flow this morning yet either. OIH is another energy. There we go. I've worked for a couple of these names. And again, a really big gap to fill out here, right? OIH right now is sitting around 220 to 221. So it's in the channel and it's getting kind of close to getting that gap filled. But then you've got names like Rig that doesn't have that gap on there. That one's red to green this morning. The gap was already filled on Tenaris. See, a lot of these are already gap filled. All right, HP is in the channel, nice breakout. And looks like CHK managed to close the gap this morning. So the bid ask right now is kind of wide, between 20 and a quarter and 22.60. But I think even 22 and a quarter would get us. So that'd be another gap fill. If it's already filled the gap, look for it to fade back on support. And the support you would want would be the close of the gap. All right, financials are up this morning. The XLF is moving around, but not a lot of flows yet, right? We're just getting these little ticks. And we want to see, some flows with some conviction in there. Not enough yet. And that's in XLF, so maybe in KRE. Nope, not really. So it's up a little bit, but it seems like it's up more from just algo repositioning than any sort of activity coming in. Yeah, top three names in the list: OIH, XOP, XLE, all energy. Biotech is up as well, XBI. I might not have it. I got IBB instead. All right, here's the top holdings for XBI. I'll have to go in and build me a list. I don't know most of those names either, so that'll take a little while to kind of get familiar with. Anyways, though that sector is up this morning, I'd check out those names. Take a screenshot of it if you don't see how I got there. If you go to the top of the screen, you want the Analyze tab. Go all the way to the right to Fundamentals. Type in XBI. You'll get this page. You can sort them by their weight. GBT is the heaviest name in that list. And it looks like the top 5 are bigger than almost everything else combined in the top 20. Which is usually how it goes anyways, right? All right, everybody, be careful, be safe, have a good one, and I will see you all tomorrow.